Today, the biggest company to ever go public hit the stock market. SpaceX started trading this morning on the Nasdaq, priced at $135 a share with a value of about $1.77 trillion. That makes it the largest IPO in history, bigger than anything Wall Street has ever seen. And on day one, it is already worth more than Tesla. Right now, millions of regular people are staring at their phones, wondering if they should grab some before it runs away from them. And in all that excitement, one fact gets completely lost. The way an opening day actually works was designed very carefully for someone other than you. So let me walk you through what really happens to your money when a company goes public, using the biggest one ever as the example. By the end, that scary headline turns into a calm, simple decision you fully understand. Let me start with the numbers because they are genuinely wild. SpaceX sold about 555.6 million shares last night, and in doing so, it raised roughly $75 billion in a single offering. To put that in perspective, the old record holder, Saudi Aramco, back in 2019 raised under $25 billion. SpaceX more than tripled it. The total value at that offer price lands around $1.77 trillion, which would slot it in as roughly the seventh biggest company in America on its very first day. And people clearly wanted in. The deal was about 4 times oversubscribed, meaning there was something like $250 billion of orders chasing a much smaller pile of shares. Think about that for a moment. $250 billion in demand for a slice of one single company, all in one night. Before trading even opened this morning, the betting and prediction markets were pricing the stock to open somewhere around $167. That is a jump of roughly 20 to 25% above the price it was sold at the night before. So if you had been one of the chosen few who got shares at $135, you would already be sitting on a tidy profit before you even finished your coffee. Sounds like free money, right? Hold that thought, because the word chosen is doing a lot of heavy lifting in that sentence. So what even is an IPO in plain friend-to-friend language? Those 3 letters stand for initial public offering, and the idea is simpler than it sounds. Company that was private, owned by its founders and a handful of early investors, decides to sell a chunk of itself to the public so anyone can own a piece. Up until that point, you could not buy SpaceX even if you wanted to. It was a club with a velvet rope. The IPO is the day they finally start selling tickets to the public. To pull it off, the company hires big investment banks to run the whole sale. Those banks figure out a price, quietly line up their buyers ahead of time, and then on launch day, the shares start trading on an exchange like the Nasdaq. From that morning on, the price moves based on whatever buyers and sellers agree on, second by second, just like any other stock. Simple enough so far, but the single most important thing to understand is hiding in one tiny detail that flies right past most people. That $135 price was not set by the open market. It was not some fair number the crowd voted on. It was set the night before, behind closed doors, by the banks, in a room you and I were never going to be invited to. That matters more than almost anything else, because of who actually gets to buy at that price. When a bank sets the price at $135, the shares at $135 do not just go up for grabs. They go to what is called the allocation, which is a polite Wall Street word for the lucky list. Historically, that list is split about 90 to 10. That means roughly 90% of the cheap shares go to big institutions, the giant pension funds and hedge funds and Wall Street firms the banks want to keep happy for the next deal. Only about 10% of it trickles down to regular retail investors like you and me. Picture a sold-out concert where 90% of the front row seats are quietly handed to the band's friends and business partners before tickets ever go on sale to the public. That is essentially how an IPO allocation works. So when you hear that SpaceX priced at $135, understand that almost none of us were ever standing in that line. The cheap seats were handed out to the people who were already inside the building, sipping the free drinks. Now here is where the famous opening day pop comes in. And once you see how it works, you cannot unsee it. The banks deliberately price the deal a little low, on purpose. They want it to jump on day one, because that instant gain is basically a thank you gift to the big clients who got the cheap shares. Think about it with SpaceX. If it is priced at $135 and opens around $167, that is a jump of about $32 a share the moment it starts trading. Who pockets that $32? The institutions who were handed shares at $135 the night before, many of whom turn right around and sell into the excitement. The pop is real money, it just lands in someone else's account. And the regular person watching the green numbers light up on launch morning is almost always buying after it opens, which means they are paying the higher, already popped price, not the $135 one. So when the news anchor breathlessly announces that SpaceX surged out of the gate, that surge is not a gift to you. It is the gap between the price you can actually get and the price the insiders locked in last night. In plain terms, the jump everyone is cheering on television is the exact reason a normal buyer is paying too much. The excitement and the trap are the same event, just seen from two different sides of the velvet rope. Now, a few brokers did crack the door open a little wider this time, and that is genuinely nice to see. Fidelity, for SpaceX specifically, cut its minimum down to $2,000 so smaller investors could try to get an allocation. I love that more people got a shot. But you have to read the fine print because it has teeth. There is a flipping rule. If you get IPO shares and then sell them within 15 calendar days, you get penalized. The first time, you are banned from IPOs for 6 months. The second time, a full year. The third time, it is a permanent ban tied to your social security number, basically for life. Day 16 is the first day you can sell without getting slapped. And even if your order gets confirmed, you might get only part of what you asked for or nothing at all because it works like a lottery. So the door is open, which is great, but walk through it with your eyes open. If this is making the machine click into place for you, take 1 second and subscribe to Sarah Finance. We break down the money news that actually hits your wallet every single day in plain English, so you are always the calmest person in the room when a headline like this drops. All right, there is one more piece of the day, one machine that almost nobody talks about, and it shows up months later. It is called the lockup period. The people on the inside, Elon Musk and the early backers who own enormous chunks of SpaceX, are contractually barred from selling their shares for a set window after the IPO. That window is typically around 180 days. So for the first 6 months or so, the supply of shares actually floating around for the public to trade is artificially tight because the biggest owners are legally frozen out. When that lockup expires, a whole flood of insider shares can suddenly become available to sell all at once. More sellers showing up, the same number of buyers, and basic supply and demand says that often pushes the price down for a while. This is not a conspiracy, and nobody is doing anything sneaky. It is just the calendar doing its thing, the same way it does for almost every company that goes public. And the genuinely empowering part is that you already know this calendar exists, which means you do not have to make any move at all at the opening bell. You can sit back, watch, and let the dust settle on your own terms. So let me hand you the most useful thing in this whole video, which is what actually tends to happen after the confetti is swept up and the cameras leave. There is a professor at the University of Florida named Jay Ritter who has tracked initial public offerings for decades. He is the guy other finance people quote, and his data is about as close to gospel as this stuff gets. Yes, the first day pop is real. From 1980 all the way through 2025, the average IPO jumped about 19% on its first day of trading. Last year it ran even hotter than that. But remember the thing we already learned, that gain belongs to the people who bought at the offer price, not the folks buying after it opens. Now hold on, because this next number is the one that should stick with you. Ritter found that investors who bought at the first day closing price and then held on for 3 full years earned roughly 29% less than they would have in a plain basket of similar, boring companies. Not 29%, 29% worse than the boring option. Over the long run, freshly public companies have underperformed comparable firms by about 2.1% every single year. Big shiny spike, then years of quietly lagging the pack. This pattern is so reliable that economists gave it a name. They call it the IPO anomaly. And the reason it happens is almost human. Companies tend to go public exactly when excitement is highest and the story is shiniest, which is usually the most expensive moment to be a buyer. And this is not just theory, because we have real recent examples. Take Alibaba back in 2014. It was offered at $68 and opened at $92.70, a headline pop of 38%. But anyone who actually bought at that opening trade earned barely about 1% by the time the day closed, and later the stock fell below even its $68 offer price. Visa in 2008 closed up 28% on day one, which sounds amazing, except buyers at the very first trade finished that same day down about 5%. Or Arm Holdings in 2023, which popped around 25% and then was right back at its offer price within a single week. The pattern repeats so often, it is almost boring. The headline pop and the experience of a regular buyer are two completely different stories. Okay, but a stock is still a piece of a real business, so let us be fair and look at SpaceX on its actual merits, using its own official filing with the government, the document every company has to publish before it goes public. And honestly, there is a lot to like in there. In 2025, the company pulled in about $18.7 billion in revenue, up a healthy 43% from the year before. That is genuine fast growth, the kind that gets investors excited for good reason. There is also a real loss on the books, about $4.9 billion for the year, and at first glance a number like that looks scary. But here is the encouraging detail sitting right underneath it. Almost all of that red ink came from the artificial intelligence side, the company called xAI that merged into SpaceX earlier this year, which burned through around $6.4 billion on its own. The core rocket and internet business was actually doing just fine. Starlink alone, the satellite internet service, did around $11.4 billion in revenue and about $4.4 billion in operating profit. Strip out that big, expensive AI bet, and the underlying company was roughly $791 million in the black. So this is not some empty hype machine. There is a real profitable engine humming away inside it. That said, the filing itself says plainly, in black and white, that the company has a history of net losses and may not reach profitability in the future. So they are being honest with you, and you should be honest with yourself too. And one more thing worth knowing before you buy. Even after selling all of these shares to the public, Elon Musk keeps over 82% of the voting control. So public buyers are getting a tiny economic slice and basically no say at all in how the company is actually run. So we arrive at the real question. Should the average American buy SpaceX today? Here is the honest, calm answer. The opening day is built for the people who got the $135 allocation, and a $1.77 trillion price tag leaves very little room for error, which is exactly why the experts are genuinely split on it. None of this is financial advice, and SpaceX may well be a fantastic company for years to come. But you do not have to decide anything at the opening bell. That is the whole secret. Nobody is forcing you to make a $1 trillion decision in the first 10 minutes of trading. So if you do believe in SpaceX for the long haul, here is the calm playbook, and it has 3 simple parts. First, there is no rush whatsoever. The stock will still be there tomorrow, next week and next year, so you never have to chase a green candle on the screen just because everyone else is. Second, if you want in, start small and add slowly over time. That boring, unglamorous approach people call dollar cost averaging, where you buy a little bit on a regular schedule no matter what the price is doing, almost always beats one big nervous bet placed on launch day. You spread your buys out, you stop trying to outsmart the perfect moment, and you take the pressure off yourself completely. Third, remember the calendar we talked about. You may very well get better prices down the road, especially once that 180-day lockup expires and a fresh wave of shares hits the market. And honestly, if you already own a broad index fund, you might end up holding a little sliver of SpaceX automatically over time without ever lifting a finger. The point is you have options, and not one of them requires panic, fear of missing out, or a rushed decision at the opening bell. Because here is what you actually walked away with today. You now understand the machine. You know the $135 price went to the insiders. You know the pop is their gift and not yours. You know about the 15-day flip rule and the 180-day lockup. And you know what history says about chasing a hot debut. That scary fear of missing out headline that had your thumb hovering over the buy button this morning? It just turned into a calm, informed choice that is completely yours to make on your own schedule. That understanding is the real win here, and it is worth more than any single trade. If this made the whole thing click, do yourself a favor and subscribe to Sarah Finance, because we do this every single day, turning the noisy money headlines into something you can actually use. Stay curious, stay calm, and I will see you in the morning.